Welcome everyone to the Trust the Plan podcast. I'm Nick.
And I'm Jim.
And we believe by providing education and guidance, we can help build a plan for you that you can trust. Trust the plan. The plan, the plan, the plan.
I like that.
Yeah. All right, so today we're going to talk about life insurance. We just lost all of the viewers, right?
Yeah.
Or listeners. So we wanted to talk about life insurance, one, because we have not done a podcast on that. It's rare that we find that we didn't touch on something yet.
Right.
At least I don't remember doing one on life insurance. And it's also timely because we're in November now, and what does that mean for our benefits at work, right?
Yeah, typically it's open enrollment.
Mm-hmm. Open enrollment for health insurance, life insurance, disability,
Right.
HSA, FSA, all that different stuff, right?
Mm-hmm.
So let's be aware that it's open enrollment for life insurance, and if you are light on your coverage, now's a good time to reevaluate. So what do we think about in terms of how much life insurance do we need?
Yeah, we usually think about, because you got to look at where you're at in life, right? And some people need more insurance than other people. So we look at covering debts, right? Do we have a mortgage on the house? Are there cars that have debt? What other kind of debt do we have that we would need help paying for if there was a loss of life in the family? Second one is, do you have kids? Are they young? Do you want to pay for college? Would that be a good gift for the kids to have that paid for? So we'd want to have an amount of money set aside to cover college. And then the third one, and oftentimes the biggest number is income replacement. How much of the income that we lost do we need to replace? Those are the big three things that we look for. So if you think about it that way and you really add up what those amounts are, maybe you owe $200,000 on the house, maybe you have two kids you want to put through college, there's another $250 for college. So now you're already up to $450, then income replacement. What's enough to replace, and how long do we want to replace it for? Even if you're making $100,000 a year for 10 years, that's $1 million, and that only covers you for the next 10 years.
We can make the case that almost any young family needs to have at least $1 million,
right?
$1 million on him and $1 million on her.
Yeah.
Right.
Yeah. Even if you're the sole breadwinner, right, and the other spouse is a stay-at-home parent, there's a ton of value on their life as well, right? Because if something happened to the stay-at-home parent and you have young kids, well, now what? Now how am I going to cover daycare? How am I going to cover all these different expenses that pop up because of the help you lose?
Yeah, the daycare is out of control,
mm-hmm.
right?
Absolutely.
And so, the surviving spouse might have a great job, okay?
Mm-hmm. But
they're going to be overwhelmed with grief and all these other things that we have to take care of. Mm-hmm. And so it's so cheap, especially for a younger insured, that it's just so difficult to not make the case, right?
Right. Yeah, if you're young and you're healthy, and you're speaking of term insurance,
yeah.
That's so cost effective, and it really is. If you look at a term insurance policy that's going to cover you for a specific period of time in your life, right? Because once you progress in life, and once your kids are older, maybe they're through college, maybe now you have a bigger nest egg of retirement money set aside, the need for insurance becomes less. So that's kind of why we default towards term insurance and covering for this period of time that is the essential need.
Yes, and so there are times when you can buy your own term policy, which is cheaper than what you find at work, and there are times when work is cheaper than a term that you might find outside of work. But oftentimes you can do a policy through work without having to go through a health
mm-hmm.
exam,
right?
Which is very convenient, right? And maybe that allows you to get the coverage that you wouldn't be able to get elsewhere.
Yeah. Good point.
But it does make sense to price it out and look at what kind of policies you can get outside of work, because if you ever change jobs, right, then you have to go through this process again if you're only insured through work, whereas if you have your own policy, you get to take that with you.
Mm-hmm. Yeah, I think that's a great point. So depending on where you're at, if you're one of these younger people especially who foresees a long-term insurance need, for several more years, there probably is it would be a wise thing to do, maybe to look at a standalone, something that you have that goes with you no matter where you go, and then maybe supplement through the work, group plans through the employer.
Excellent. So if you'd like us to take a look at what you've got going on for your life insurance, let us know. You can schedule online, peakwm.com. I think that's it.
I think so.
See you next time. It's going to be even more exciting.